and Happy New Year to you all. This is Dr. Bob Flower with the Monday, January 4th Master Pattern Report. Okay, so let's see how we did in the last week of 2009. Well, we had called for interest rates to rise, which they did indeed. We also called silver up, which it has, and then we said it would be down this week, which we believe it will. Actually, we think it may be topping out around that 1760 mark. We also called for oil to hit $82 within the next 10 days, and we're there now, folks. That might go to $85 as a top, but let's see. We'll report further on that. So once again, we've had some good hits, and also we call for the S&P to be up, which it broke out on Thursday. Okay, this week we see silver down off its highs this week, towards the end of the week, going into next week, and then a recovery after that. The dollar down, and interest rates up still this week. We're looking for S&P moves on the 5th, by the way. Now let's take a look at some charts before we go on here. Here's one on interest rates, showing our move up, and our indicator is still up for last week. Here's our chart on the dollar, and as you can see, it was showing a high on a hit on the 31st, which actually hit on the well, it did hit on the 31st, yes. But you can see here, okay. And I believe isn't there a new yes, and it's showing for another hit tomorrow, the 5th. Okay, and silver. This is showing us that the high, or there was an up hit turned on Wednesday, and I'll show it to you right here. It suddenly took an up jump here. So that occurred on. It shows it January 1st, which actually would mean either the day before or today. And I haven't looked today, but I understand that silver did make a good move. In fact, that's not true. I know it did because we went we went long on silver on that indicator Wednesday evening, and we sold out our position today. Made a tidy little, almost 200% return on that, and we're also short on the dollar. So, and this is showing a move on silver. I think we said this week we thought it would be down. Okay, all right. So let's talk about a little bit about real estate and see what's coming up here. Last year there were some 24,000 foreclosures affected. This year that number will rise significantly. This will put a heavier burden on banks who are already overburdened with bad loans. 1 out of every 7 property owners with a mortgage are having difficulty of some sort. That's a big number, folks. That's 14%, 15% of the market. The problem that we're having now is that prime loans are now being impacted due to higher interest rates and more product availability, and of course lower prices. People are now considering that foreclosure prices are the norm, which has not happened to us since the Great Depression. And also there's less equity and tougher loan laws restricting the buying public this year. It's going to be even worse this year. On one hand, the government is telling banks and lenders to get out there and make loans, but on the other hand, they're putting in place more loans and restrictions and laws that are making it that much more difficult to perform. So they're biting their tail, or is it our tail? They're hard at work. So 2010, 2010, whatever, is not looking good for real estate. Yet opportunities are available, so you can't totally discard it. Now, in fact, we've discovered a 37-year real estate cycle, which we've been examining and playing with. And given that, it would appear that this market is not going to have a turnaround until 2015. So this is something that you need to take into account and be realistic about. Okay, so let's look at our socio-economic political structure here, and let me just tell you about the Master Pattern Program. Is not only about economics and forecasting and predicting stock markets. It's also about predicting behavior. Right? In fact, that's how it was originally founded. When we discovered there was a geometry to it, we turned the geometry towards the market, and we've had something like 140 out of 143 successful calls. But it still was and is a behavioral issue. What we've done is we've created charts for individuals, such as like with Obama, and I just want to read to you what some of these charts are showing and relate them to this terrorist thing that's going on now, okay? On the chart, it shows that he has a very weak organizational and character posture. Character, by the way, his expression, what he shows, okay? His priorities, his details, and his models of reality all project an outer image, which means he's very inclined towards public perception more so than anything else. Okay, that's more important to him than anything. His orientation is also inclined towards a worldly view of things. In other words, he views events as how he can put them into a global perspective, not nationalistic. That's why he does things like goes around apologizing for the United States and its conduct, because he's trying to meld some sort of a world power, and and he's the leader, or who's ever pulling the strings are the leaders is more accurate. Okay. Now, pretty soon what we're going to be doing with this is we're going to be presenting these behavioral charts and profiles on our Gilchrist Institute website. Within the next several weeks, I'm sure we'll have them up there. And this is part of the service that we render to businesses, companies, individuals, professionals, and whatnot, is developing these charts and showing inconsistencies and improved or adjusted pathways to success. Okay, so we'll let you know when that's in place, and we invite you to take a look at that. I think that for those of you who like these predictions with the market, if you are inclined to look at this type of thing, I think you're going to find some pleasant surprises as to this new science, this new technology that we've discovered, and get a lot more out of it than what you may be gaining so far with things. Okay, so again, Happy New Year. We think that being prepared, it will be a Happy New Year, regardless of what happens, and we wish you the best.